Hello, I'm Jim Lebenthal, Chief Market Strategist at Cerity Partners and a member of our investment committee. And this is our outlook on the economy and financial markets for the month of June 2026. I want to try to answer a question that's been coming up a lot in client conversations. And that is, how on earth can the stock market be rallying to new record highs when there's so much bad stuff going on in the world? And by bad stuff, I mean the war in the Persian Gulf, the closure of the Strait of Hormuz, spiking oil and energy prices, inflation, plummeting consumer sentiment, which is at a record low. Given that as a backdrop, how can we be doing so well in the stock market? Well, let me try to answer that question. I'm going to start by saying we're not negating any of those things that I just mentioned as potential risks. They are potential risks. And inflation, if it stays high, as it is right now, may possibly lead the Fed to raise rates maybe later this year or next year. While we think that would be a policy mistake, we can't rule it out. But instead of focusing on the negatives, let me tell you what we see as going right in the markets and the economy right now. To start with, profits are growing very strongly. We've just finished the first quarter 2026 earnings reporting season, and earnings grew 28% year over year. And yes, a lot of that was technology earnings, which grew over 40% year over year. But even outside of technology, you had double-digit earnings growth in many, many other sectors. There is good earnings growth, and it's projected to continue. This year, full year 2026, S&P 500 companies are projected to grow earnings 22% over 2025. And then again, they're expected to grow over 15% in 2027. That strong earnings growth is a major reason why the equity market is rallying. And that earnings growth is also mimicking what's going on in the real economy. We are currently seeing economic growth as measured by gross domestic product here in the second quarter of 2026, tracking at 3%. That figure comes courtesy of the Atlanta Fed and their GDP Now tracker. And that GDP growth is also showing up in a stronger labor market. In past months' reports, I've been telling you that we're okay with the labor market, but it was giving us some worries. Well, the last 2 months' worth of labor market reports show that job growth has picked up. And if we look at weekly initial jobless claims, there isn't much firing going on. Yes, there are headlines out there, and I'm sure you read them about this company or that company laying workers off. But those layoff announcements are a drop in the bucket compared to the overall labor force for the United States. In short, the labor market looks good. When you put those three things together, strong profit growth, strong economic growth, and an improving labor market, those are the main reasons why the equity markets have been rallying in the face of that negative news that I spoke about. And just one more comment about that negative news. It's easy to focus on that. It's easy to lose sight of the fact that things can and may get better. Now, I'm not guaranteeing that. We can't guarantee anything about the future. But as I speak to you today, West Texas Intermediate crude oil is down around $90 a barrel. Yes, that's a lot higher than at the beginning of the year, but it's well below the $100 plus that it was at just a couple of weeks ago. The markets seem to think that there will be a deal to open the Strait of Hormuz soon. We're seeing that, in fact, with tanker flow starting to pick up, albeit slowly, but starting to pick up through the Strait of Hormuz. If the Strait of Hormuz opens, oil prices are likely to come down further. And while inflation won't come down to the Fed's target anytime soon, it should come down enough to stave off those rate hikes that I was talking about before. We don't think the Fed will raise rates. We think that will be a policy mistake, nor do we think they will need to. So I hope I've done a good job of answering how things can look so good and so bad at the same time. I look forward to updating you on the prognosis another month from now. Thanks for listening in.